Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Omicron is still providing plenty of volatility out there, but it seems that sort of investors are now looking through this in terms of sort of vaccinations coming through. And cases at present, symptoms aren't really being quite as severe, and more importantly, hospitalizations are nowhere near as great as first people thought. So on the back of that, the Dow in the last couple of days is up over 1,000 points. So just possibly we might just get that year-end rally that people were looking for a couple of weeks ago. Now to counter that, the latest employment data was a little bit on the weak side. Came in at 210,000 versus around 570 expected. Now also you've got the Fed as well. I've talked about now that transitory is now a good time to be retired in terms of talking about inflation. And then as well, we've got the Fed looking at potentially increasing the level at which they reduce the asset purchasing and just increasing that taper. And certainly once they withdraw that support, the next phase is then a rate increase. Now, even the mere talk about a potential rate increase has seen the dollar strengthen dramatically on the currency markets. Also, as well, worth keeping an eye on, the cryptos are facing a little bit of a sort of a sell-off out there as well. Certainly, Bitcoin is now off nearly 30% from its November highs. Also, as well, obviously, you've got sort of increased political tensions with Russia and sort of massing troops. There was a conference call between President Biden and Vladimir Putin that supposedly was pretty tense, pretty terse. It'd just be interesting to see if anything does come out of that. Because certainly what's been amassed on the Russian-Ukrainian border, potentially it does look like, a potential sort of setup ready for an invasion. You've got around 100,000 troops, you've got supply chains, you've got hospitals, etc. And it really does look a little bit worrying out there. Now, obviously, if that did escalate and Russia did invade Ukraine, that would then have major implications for the energy markets. So oil has recovered a little bit, but it's still, sort of hovering around or just below that sort of $70 a barrel. Now in the UK, Omicron is really starting to sort of get a bit of a hold out there, increased number of cases, but it's really the sort of population that seems to think that, coronavirus is sort of done and finished now, we've got the vaccine and you don't have to worry about it. Now clearly that is not the case. Obviously the worry is as we head into the Christmas period, cases start to increase, and then you start to see an increase in hospitalizations as well. And I say, it's really just come at the wrong time because the UK economy was pushing along at a pretty good rate, even potentially talking about the central bank trying to start to increase interest rates. That's certainly not going to be the case in Europe. The European Central Bank has made no mention about increasing rates, still providing plenty of support for the economies as well. So it is just going to be very interesting to see how it sort of transpires and sort of plays through over the Northern Hemisphere winter, because certainly, cases are picking up, and as we come into the festive period, just going to be very interesting to see if there is a big increase in cases. Now in Australia, really, that economy is playing a bit of catch up, after the lockdowns in New South Wales and Victoria. And, forecasts now are looking for GDP for 2022 as being maybe as high as 5%, if not a little bit higher. Obviously, the issue is they've still got, the inflation fears and worries that are facing the rest of the sort of global economy. But, given the fact that a little bit of a lag, I'd say, due to those lockdowns, just be interesting to see how it plays through, especially from the central bank. Because potentially, the central bank, Reserve Bank of Australia, won't have to look at increasing rates until maybe third quarter, even fourth quarter of 2022. Now here in New Zealand, we've had the first week of the new traffic light system, and that sort of, so far has gone okay. We've still got cases floating around the sort of 100 cases a day mark, but at present we haven't really seen a big spike. Now many people argue that is because there is still a border between Auckland and the rest of the country, and that will sort of cease to be in operation around the 15th of December. And then certainly the worry is that cases will start to increase, and it's just a question of whether we see a spike. Certainly they have sort of spread to the regions. Certainly most of the North Island now has at least, sort of 1 or 2 cases in each sort of region. On the political front, Chris Luxon is now the new leader of the National Party, and so far he's he's sort of done pretty well. Had his first sort of question time, questioning the government, and by all accounts came out pretty well. So now that will be interesting for the political landscape here in New Zealand because, certainly the government, has faced a little bit of criticism over the past sort of few weeks. But really, the opposition party, National Party, haven't really been able to gain much sort of headway against that. Now, on the positive front again for the New Zealand economy, Frontier have announced the payout. And the midpoint of that is $8.70, which is, certainly one of the highest payouts we've seen. And potentially puts around $13 billion into the economy. Now, it is just going to be very interesting to see, how the economy performs over the next sort of couple of months. The Reserve Bank meet again in February. Will they look at increasing interest rates? I suppose that really all depends on, how the economy performs. Once it is sort of open, Aucklanders can sort of freely travel. Potentially, we should see a pickup in economic activity, certainly, but it's just a question on the sort of, let's say, the uncertainty of COVID. And also as well, whether we get Omicron here as well. Most sort of analysts and experts feel it's just a question of when, not if. But also as well, obviously, there are signs now with the latest rate increases that the housing market potentially is just starting to slow down just a little bit. We're still seeing year-on-year gains in prices, but certainly the rate of that sort of growth is falling. Now, obviously, for investors out there looking for income, it's still pretty tough. Although we've seen a couple of rate increases, certainly term deposit rates haven't really shot up dramatically. And if you are looking for income, there are plenty of alternatives available. Go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.